Hi guys, it's your guy here, the unknown trader. Today I want to show you how to get the best entries, okay? This video is about entries because I realized that most people are struggling with entries. So I want to help you get the best entries every day, okay? So without any further ado, let's jump into it. And something important before I start, look at the disclaimer in my description, okay? Read the disclaimer in my description, okay? So first things first, I just want to show you this book. This is one of the best books, and if you can get your hands on it, kindly do. It's way too cheaper than most courses that you buy from people who don't know or understand trading, okay? There are those who understand and there are those who don't understand but make money through teaching. So this book will really transform your life, okay? It will really change your life. Just get it. You can buy it from Takealot, Amazon, or anywhere online. You can get a hard copy or a soft copy. It's fine. It's called Technical Analysis and Stock Market Profits. It is considered the real Bible of technical analysis, okay? My mentor, Peter Brandit, is an old man today. He read from it. Ever since he was introduced to this book, he became profitable, okay? So this only tells you one thing: markets don't change. They have never changed, and they are not gonna change anytime soon. Yes, people say markets evolve, but honestly, once you get the concept that I'm gonna show you today, you will realize that nothing changes. If Peter Brandit, who is old now, started reading it decades ago, and the book itself was written many decades ago, but it's still relevant today, and it's still the best book. Most books that came after it are just like they're an expansion of this book, okay? So this is the best book you can ever get your hands on, okay? So now let's jump into this. As you can see here, okay, this is my previous video. I always show you the criteria, and these are important criteria. If you want to get the best entries, make sure you know this criteria, okay? Just write them somewhere, because in my video I'm gonna go through them, okay? I'm gonna go through them. You need a pattern, you need a high or a low, you need a pin engulf. I'll show you that. You need an engulf. This is an engulf that shift the zone away from all the trapping, okay? You need a breakout. You need 3 pushes back into the pattern, or 3 pushes back into the breakout, and you need like to identify trap traders, because the market do 3 things. This is everything. This is all I ever say in all my videos. Markets do 3 things: they show, they trap, and they reverse. That's all they do, okay? So let's jump into the purpose of this video, where we talk about entries, okay? Okay, let me get this over here, okay? I'm on Great Britain USD, okay? And as I always say, guys, you need a setup. Don't just come to the market and like wonder which direction is it gonna take and try like to catch the right direction. It doesn't matter if you get the direction right, okay? It doesn't matter. It's not about getting the direction right, okay? It's about being consistent. It's about understanding. It's about having a signal, okay? You have to have a strategy. You have to have a signal, okay? So I will draw this trend line over here. I don't use trend lines, but if you use them and they're working for you, I'm not here to judge any strategy, okay? As long as it's working for you, it's good. But for me, I don't use them, because they use trend lines mostly to trap people. Remember, there's something important to understand about the markets. First of all, you don't move the markets, okay? Only institutions move the markets, okay? So by knowing that, you have an advantage, because the only thing you can do, remember, most people will tell you that to be profitable, you must go against retail guys. Retail guys are everyone trading from home, me and you, and all sort of stuff. We are not institutions, okay? We have limited capital, and we have limited resources, and even time. They're gonna use time against us. I'll explain that in a moment. But just know that you don't have the power to move the market. Hence, you can't come and decide which direction the market are gonna take, okay? They will throw their tactics. They will do everything possible to trap you. I told you, they show, they trap, and they reverse, okay? So they're gonna do everything to try and trap, to show you something and trap you, and then reverse with your capital, okay? That's why there's a statistics which says 90% of people are losing their capital, whereas only 10% are profitable. And there is a law that requires every broker to publish the numbers, okay? That's why when you go to any broker, they're on their website, if you scroll down to the footer, they will have this statistics whereby they tell you that, okay, on this broker, 90%, 94%, 95% of people are losing their capital, and only 5%, 6%, 8% are actually profitable. Okay, they are required to publish those statistics by law. Okay, so when you know that, you have to be curious. Okay, you have to treat this as a business, and I repeat again, this is not gambling, this is a business. If you're thinking about of it as a gamble, then I suggest you find something else to do, because you're not gonna give it the attention it needs. Okay, this is a business, and I repeat, this is a business. That's why you show up every day, but you don't execute every day. Okay, and one thing people usually misunderstand is that, like, trading is more of waiting as compared to execution. Most people believe it's all about execution. No, it's about waiting. You'll spend 90 to 95% of your time waiting, and only 5 to 10% executing. Okay, that's doing it the right way. So what I'm trying to say is, if every time you open your chart you are seeing an entry, then you are probably doing it the wrong way, because you can't, like, okay, I come to my chart right now, then I see an entry. Later 10 minutes I open my charts, I see another entry. No, it doesn't work like that. It's more about having a setup and waiting for all your criteria to be met. As I showed you, there are a number of criteria that I specifically use. Okay, I'm not saying they are the best, but they are working for me. So what I'm saying is, you have to have a signal there. You have to have rules. Like, markets are not perfect, but you must have strict rules. You know that markets are not going to be perfect anytime soon. They've never been perfect, because their objective, actually the objective of this whole thing, is to move capital from many and give it to few. So once you understand the objective of the markets, believe me, there's a book I read which says, yeah, it's Gabecker actually, who says, if this objective, like, was flipped, if the markets start giving capital to many and taking it from the few we are referring to those people who control economies of the world, those powerful people in the world. Okay, a topic of another day. So they are the ones who are taking the capital from everyone sitting at home and everyone who is a retail guy. So if the tables were flipped, okay, the markets will cease to exist. Okay, the markets will cease to exist. Kindly just understand that. I just want you to have the proper mindset, okay, to have the proper mindset to understand what the markets are, because there is a huge misconception. Everybody believes that markets are here to give you something, you to transform, to change your life so quick. That's not the purpose. Okay, that's not the purpose. Yes, they have the capability. Yes, if you understand that, that can happen. However, that's not the role of the markets. Once you understand the role of the markets, you'll know that you should treat it as a business and you should be serious. Another thing, again, I'm not trying to frighten you, okay? Another thing is, like, the institution guys are cruel, okay? They don't want to give you any profit. They want to take everything. That's why they'll always try to scare you out of a winning position. Just know who you are against. These guys are highly educated. That's the first thing. Secondly, these guys have unlimited capital. Okay, these guys have the best algorithms in the world. And again, there are different sessions. There's an Asian session, there's a London session, there's a New York session. What should that tell you? It tells you that, okay, in a day you are alone, okay, in front of the charts. So you have many hours to sit in front of the charts, and you are alone, and you are human. You have emotions. You get tired sometimes, you get annoyed sometimes, you get devastated sometimes. Okay, there's a lot you will be dealing with. Maybe you have a family as well. So with that time that you have, you can't just be focusing on the charts the whole day. Why? Because the institutional guys have many workers from different continents. When we talk about Asia, there are guys that are moving the Asian session. Okay, so those guys, usually you find that they are working 3 hours, and there are many. So imagine you're gonna be sitting the whole day, maybe from 2 a.m. to 5 p.m. okay, You are alone. Those guys are exchanging. After those guys in Asia are done, they are switching to the guys who are in London, okay? And those who are in London work for 3 hours. They go for a gap time, and after that there's a New York session. I'll show you the sessions, okay? I just want you to understand there's a US session that starts at 2:30 if I'm using my time, which is South African Standard Time, okay? So those guys are exchanging, and during the gap time they're working 3 hours, and the other 3 hours is gap time, where they call each other. The guy from Asia will call the guy from London and tell them that, oh, okay, I'm done, I did this and this and this, I have how much trapped where, if you just go this direction, how many pips, and you'll grab all those orders. And after that, do this. And then after the London session, the London guy during the gap, after his 3 hours, there are many, okay, after the 3 hours, he's just gonna call the guy from US. Okay, I did this, I trapped how much where and how much where, and then you go grab it and change zones, and you'll just be alone sitting in front of your screen. So you must understand these things, because they will eventually affect your performance, okay? So that's why if the moment you open your screen already you're finding an entry, then believe me, the thing is, you might be falling for traps, or you might just get trapped in between, okay? Because these guys have a organized plan, okay? And the fact that there are many, they don't get tired. We get tired because we are the ones sitting in front of the screen. That's why I'm highly selective. I go in for 3 hours during London, actually 2 hours during London and 2 hours during US session. So for me it's only 2 hours, then I rest during the gap time, and then I come back, it's another 2 hours, then I rest. And the Asian session, I don't even want to bother myself with it, okay? Because you are alone, okay? That's something you must understand. I know this video is getting long, but these are the small things that if you understand, you will just get to know who you are against, okay? Because remember, if you are buying, they are selling. If you are selling, they are buying. And this, guys, it's a bit hard. Okay, I'll explain this when we go. Okay, anyway, we have a market that is going up. I know most people want easy things like, oh, an indicator that sells, oh, now buy, now sell, now buy, now sell. But one problem with indicators is that they are lagging. They are always late, okay? They are always late. So one thing that should tell you is, if the market is going like this for a couple of days, on the third day, that is when most indicators are likely to get the underlying trend, okay? They can detect the trend. That's after 3 days of the market going in one direction. And the moment your indicators start telling you, oh, now it's an uptrend, many people will buy. And institutions know that, okay? Most of the content you're learning from has been produced by them, for them, okay? It's not for you. You think you understand the markets, but you are only understanding what they want you to understand and know. You will see what they want you to see, so that they trap and reverse with your capital. Because if all this content that everybody's talking about, trend lines, support and resistance, these things are too easy. You just throw a trend line and you buy, you sell, you buy, you sell. Why is still 90% not profitable? That's a question you must ask yourself, okay? So in order to be profitable, you must be willing to put in the work, because what I'm going to show you won't be easy. It's going to be hard for you to see or to grasp it at first, because it's a complex, it's a very, very complex concept, okay? So just understand it, please, or just repeat this video. I just wanted to share that with you, because the markets are cruel. The markets are really, really, really cruel. And unless you understand them and you know that you don't move the market, therefore your only option is to understand how they trap, how they show you something and go against it. Unless you understand that and you ride on them, you can't go against them. Obviously, if you go against them, you're going to lose everything, because they are the ones in charge. They are the ones who have the power to move the markets. Remember, it's highly expensive to move the market 1 pip, okay? It's highly expensive. So it doesn't matter if you are trading millions. That will not matter. They are institutions, okay? So now we have a market that's going up. You are using indicators or trend lines or whatsoever. It's showing that now it's a trend line and it's very strong. And look at what they do. They go up, they go up, they go up, and they start to trap. You must be able to identify trap traders. You see, maybe your indicator is showing you here, it's showing you a buy. So you're gonna buy here, okay? and you're gonna buy and think, yes, I'm riding on a very nice one and it's so strong and whatsoever. Just look what it starts doing. Yes, it goes up and it consolidates. Consolidation, the main objective of consolidation is to grab orders. Now they're collecting orders up, they're collecting orders down. And remember, it's very hard for institutions to open a position. Why? Because those guys open big positions. Okay, say maybe they need a position of a 15 million US dollars. You don't have that position, so they must show you that we are going up. They must take advantage of your indicators, show you that now we are going up, we're going up, we're going up. And the moment they show you that you're going up, your indicators are showing that you're going up. Remember, they want to sell an order of 15 okay, let's just say they want to sell an order of 500 million, okay, dollars, 500 million. They want to sell that order, so they can't sell it all at once because they won't have enough orders. So what they have to do is to show you, we are going up, we are going up, we are going up. Then you are jumping up. Oh, your indicators align, everything shows you that it's an uptrend, okay. And then what do? They start consolidating, they pull it back down. You think, oh, it's just a pullback, because the book says when it goes down, you sell, you sell here, you buy again. When it goes down, you sell, you buy, you sell, you buy, just like that. It will be telling you that you sell, you buy. Just when it gets here, you are buying. Why? Because the books and most of the content that you have consumed tells you that you are buying. See how they start, like, they're no longer going up, they are holding the market at one level, and you are busy buying and buying and buying. And what are they doing? Because they can't actually sell that $500 million at the same time, so when they push up, the people who are buying, say they sell quarter of it, okay, oh, that's fine, they pull the market down. They show you they're going up. You see this big candle here, this pin, it didn't start as a pin, it was a very big engulfing candle going up. And mind you, I'm on a 1 hour time frame. It was a big engulfing candle going up, so many people bought on this candle, okay. Remember, there's FOMO, fear of missing out, okay. Many people were buying on this candle, okay. They sold another quarter, now they are half of their 500 million that they are selling, okay. Now they pull the market down. Remember, these guys, here's the most fascinating thing. You see, I'm just gonna put this block right here, okay. I know this is a very complex concept, okay. I'm not talking about setups on this video because I want to show you entries, okay. So if you go to my previous videos, that's where I explain my setups and some of the things, even though I'm still gonna explain them. So you might just as well subscribe, okay. And sort of, for making all my videos long, there's just a lot you have to understand. I can't be telling you about trend lines and you think you're okay and then you're gonna lose your capital. No, it doesn't work like that, okay. So this level here, you see, they went up, they came, they broke this level, they came the third time, they broke the level, okay. And from this this was the last candle that ever went this high. So imagine, there are people, you know that there are spreads, right? When, if say maybe if the market, if you buy somewhere here, you might find that your order, oh, I don't need this this lines, okay. Say maybe if you bought somewhere here, your order might get filled here, okay. So I'm just gonna change this to be your buying position. What color is the buying? In most cases it's green when you buy, okay. So let's just put green and put some okay, my dots are not allowing me, but let me see. Yes, let's just put these dots, okay, and then put a visible green color. This is dark, but what I don't want it, okay. And this here, it's where your order got fulfilled. And as you see, this candle that was once a bullish candle, an engulfing candle, going up so quick, propelling everyone to buy, okay. Now people bought and their orders got fulfilled here, and maybe their stops are just let me show you something. Their stops are somewhere here, because this is where most people actually are gonna end up putting their stops, okay. Say maybe their stops are somewhere here, okay. So this is where their orders was fulfilled, this is where their stops are. So their stops are gonna be anywhere from here going down. And there are those who have big accounts who like believe that they don't need stop losses, because they believe that the market will go down. If it's going up, it will pull back and then keep on continuing on the upward direction. So they don't bother putting stop losses, okay. So now your order is fulfilled here. Look at what they do. They are now pulling the market down, okay? And then they come again and they just consolidate. They're doing nothing. They're holding the level. Your orders are in. Why? Because of your indicators, okay? Because your indicators reveal that, okay, it's an uptrend. They are always late. Believe me, they are always late, okay? You won't find an indicator that like actually I want to say indicators that actually influences your decision. Say maybe an indicator is telling you to buy now. That indicator is influencing your decision because you are looking for something easy, something you're just looking for buying. So you don't want to understand the underlying concept or what is happening in the market. You just want you just want somebody to spoon feed and give you everything, okay? You don't understand everything, so you are still in a loss because your order was fulfilled here because of spread. So they just consolidate. When they consolidate, remember I told you maybe they sold half of that 500 million here, and now they still have half to sell. So they show you they're going up, okay, fine. They sell another half. Now say maybe out of 500 they are only left with a quarter, okay? And then the following day they show you, oh, we are going up, and then you are happy and to see that, oh, the market is going up. Remember, you were in a loss for 1, 2, 3 days, and now some guys are coming in and say, oh, this was an inside bar, okay, now we are going to sell. They sell. And what did those institutions do? They sold. People are buying. They sold their $500 million. They sold everything they want. So they showed you that they are going up, showed you that they are going up, showed you that they are going up. And immediately when they got everything they wanted, now they engulf. This is crazy. Once they engulf like this, guys, believe me, they are not coming back. You are all trapped. Your indicators misled you. Your trend lines misled you, okay? You thought it was a strong trend. And look at what they give. This is crazy. You see now the market starts opening high and closing low, whereas when the market was going down up, it was opening low and closing up. This is something very crucial. Opening low, closing high. Opening low, closing high. This shows you that the market was going up. And once it starts, we can go and go and go on and on and on. Okay, opening low, closing high. This is the close of the previous day. It becomes the open of the next day. Okay, opening low, closing high. Opening low, closing high. Okay, and then when here they were trapping, and when they are ready to go, they start doing what? Opening high, closing low. Okay, that's why I say you must spend most time on your charts to understand them. The more time you spend on your charts, the better you'll understand, okay? It's not about spoon feeding, it's about understanding. It's about understanding. I know it's a complex concept. Even for me, it was very hard. I almost gave up on studying this because it was so hard to understand. But now I understand it better, okay? And it's working for me. You see, now the market is it's reversing. And in most cases, it will reverse for 3 or more days, because everything about the market is in 3, okay? If they go up 1, 2, 3 and they don't show a sign of reversal, start counting again. 1, 2, 3. You see, that's how it works. We are counting in 3, 3, 3, because on the 3rd day, that's when they are more likely to reverse. Why? Because on the 3rd day, that's when most of your indicators are showing you the underlying trend. The same applies to here. When it has gone 3 days, 3 days, 3 days, and it shows that, oh, the trend is strong, okay? That's when most indicators will start reporting, and believe me, that's when the trend will be ready to reverse, okay? Yes, there are trends that go for months and months and months, but remember, the market is about 2 things. They are gonna pump the market or dump the market. Let me put this in capital letters, okay? They're gonna pump or dump the market. This is important to understand. It's hard, I know, but it's crucial. They're gonna give you a pump, and eventually they're also gonna give you, after a pump, they're gonna give you a dump, okay? Why? They pump, they show you we're going up, show you we're going up, show you, get you trapped, and they reverse. And the most fascinating thing is, After coming here, they no longer revisit this level. They come to this level, they no longer revisit it. You find that the following and this one is still lower than these two, which means that everyone who bought here, let me show you something. I showed you these guys. These are the guys who bought maybe here, and on this candle, okay? Their orders have been fulfilled at the top, and they were at a loss ever since they started buying. And then, okay, these guys over here, let me show you. I want to show you how this markets work, okay? If the video becomes long, I'm sorry, but this is an important concept to understand. These guys' orders might have been fulfilled here. You see on this line, I mean these guys' orders, because it showed that it's going up and people were buying. Look at this candle, showed, and people were buying. So again, let's look at these guys. Okay, there are these guys again. Their orders might have been fulfilled here. So if you can look carefully, each order is being fulfilled lower, 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 and the prices are never coming back to these points. One thing they should tell you is, if you are selling, if you sell, because now the market is showing that, okay, we have trapped volume above and we are not going to that level ever again, not in a second. Because if we go, we release all those orders. Remember, they started with $500 million, and now what happened is they sold they sold everything. The whole order is now fulfilled. So if they can go up, remember, how many times have you said after opening a position that was in a loss? How many times have you said, if they come to my break even is a point whereby it's 0-0, you are not in profit, you are not in a loss. How many times have you wished they come back to break even so that you exit the trade? Yes, you admit you were wrong, but you just want them, you're praying, you just want them to come back to the break even so that you exit. How many times has that happened to you? Too many times, I believe. Okay, so they understand. Remember, these guys, I can't explain them enough. These guys are organized. They have every department you can possibly think of, okay? They know the psychology. That's why they'll use the number 3, because it's a huge psychological number in every field. Number 3 is important. In the world, in the Bible, everywhere, number 3 is important. That's why everything moves in threes. And once they have everything they wanted, if you understand how they work, that's why I spend a lot of time trying to explain how they work, just to give you a glimpse of the mindset you should have, okay? So once you understand this, then you know that if they give you an engulf like this, I usually don't promote, I'm just saying this, okay, on this video, I don't promote having big stop losses bigger than 20. My stop losses, I prefer having from 15. Less than 10, sometimes it's a trap, because if they go back 10 pips, you are closed. So 15 to roughly 25, that's what I usually prefer. I don't prefer something bigger than that. But what I'm trying to explain to you now is, you are now guaranteed that if you put your stops up here, these guys are not coming back to this level. They are showing you that we have trapped. If you put your stops over here, you are sure that they are not gonna get to those stops, by just understanding how they are currently operating at this level. They are moving down, they've trapped, they are moving down, they are selling their orders, just by understanding that they cannot sell the whole order at once. Okay, they can't execute just like us. Like for us, it's easy. You open a position, immediately gets fulfilled. But for institutions, it's very hard. They open big positions because they have unlimited capital. Okay, so that's something you must understand. I'm not saying put your stops this far, your stops this far. No, I'm just trying to show you that sometimes when you understand what's happening, you then get the understanding of where your stops should be, of levels they will never come back to. I want to show you something. Okay, this market went down 1. Okay, we're always waiting for a breakout. Okay, and I don't usually execute on a breakout exactly, because markets break out. Oh, actually here's the breakout. Okay, this is actually where more of the prices were bouncing. Okay, this is a breakout. Markets break out, they pull back in 1, 2, 3. This is crazy. I told you in my criteria on that video that wait for a breakout. Let me go back and revisit it. Criteria: we need a breakout. Okay, breakout fulfilled, breakout. Just that I'm showing you on a bigger time frame, but I don't trade this time frames. I just want you to understand the concept. Okay, have a breakout. Okay, we have a pattern. They gave us a nice M here, okay, which showed that, okay, now they've locked the high. How are you sure that they've locked the high? Obviously because they are now moving away from the high. This is an M. If you look at it like this, you can look at this like this, you can look at it as 1 2 3 triple top. It's all up to you. Okay, that's the pattern. Is the high or low lock in place? The high, and I'll show you how the high and low is locked. Okay, but how do you know that the high or low is in place? They are shifting zones away from it. There are areas they are not visiting because they are trap traders. Okay, fine. Pin engulf. Okay, most of the time you will see a pin and an engulf, a pin and an engulf. You see a pin and an engulf. Okay, breakout. They broke out here. Let me just write. Okay, they broke out. I know you don't see this other chart because it's on my other monitor, but I'll explain everything to you. Okay, rather, let me try to just drag it. Yes, let me put it like this for now. Okay, for now. Okay, it's fine, okay, let me cancel this. I don't know what I did, but okay, it's fine. Okay, as you can see, sorry for that. Okay, we have a pattern. Yes, you can. A pattern is a triple top, head and shoulder, half Batman, full Batman, M's, W's, where M's are double tops and all sort of stuff. You know those reversal patterns, right? So you can take them as 1 2, or else you can take them as 1 2 3. It's up to you. Or you can take them as 1 2 3. Okay, you can take them as well as a half Batman, where this is the first ear and after that they just go straight down. Okay, it's all up to you how you see it, but you need to have a pattern. You need to have a high in place. You see, I knew before they locked this high that this is their high for this week. Why? Because they have trapped traders up and now they're pulling down. They are reversing, but they're not coming to release them. So now we know that the high is in place. But I'll show you because you have to wait for the lock. Pin engulf. This is a pin and an engulf. Okay, I should have written them in order, but they are not in order here. Breakout. This is a breakout. All this is consolidation. This is a high. They break it. They break the low of the previous day. They come down. This is the low. They break out. As you can see, this candle closed outside. Okay, they break out and they go back 1 2 3, 1 2 3. Okay, and they show you that, oh, we are trying to go up again, but we are failing. Then immediately they give you a pin and an engulf. They engulf all the nonsense that was happening up here. That should tell you that, oh, now they are leaving. Okay, trap traders. I have a box. This box shows me that we have a lot of people trapped at the top. Okay, so if you look at all these criteria, they have been met. Okay, although now I'm just showing you all these things on a bigger time frame, I usually use a smaller time frame. Okay, so let's go down a little bit. Okay, but after this first red day, because these were green days, if you are using a 1 day time frame, they were all going up and up and up, and then immediately this one became a red day because it opened high and closed low. It's a red day. So it's the first red day, which shows you that now the markets are changing directions. And if you understand the trapping, if you understand how that works, what I've been explaining to you, you understand this whole concept, then you are sure that the market is now ready to go down. They have pumped it up, now they are dumping it down. Okay, it's just a matter of understanding how these guys operate. Okay, I wanted to explain something here, but I can see now the video is already 34 minutes long, and that's a lot of time. Okay, so I will produce another one very soon, but here I just wanted to show you how this markets operate and how you can get your entries. But bear in mind, I'm bringing another part 2 of entries. Okay, what I was trying to show you is that now you know that they are done working the highs, the high is in place. And how do you know that the high is locked? Let me just explain this here. Put a black color right here and say locked. Oh, look at me choosing the white color on a white background. Okay, locked. Okay, now you want to know how the high is locked. Simple. What did the criteria say? Did they break out? Yes. Did they give a pattern? Yes. Did they break out? Yes. Here's their lock. 1. You come and write 1 right here. You just put your 1. Okay, this is 1. This is 1. You see, they pull up, they go up, they pull down. That is 1. And then we need a 2. Okay, now we're just gonna put a 2 and just lower the size so that everything can be visible. Now we're coming with number 2. Okay, this is number 2. Okay, 1, 2, and then now we need a number 3. Number 3, it's part of the criteria that I showed you in the previous video. 3. Now they gave a pattern. We can see that they've trapped above and they are not revisiting that level. But now again, after breaking out, they pulled back 1, 2, 3. If you are taking the 1 hour time frame, then you are good to go after this. And then here's your pin engulf. This is your entry. Okay, this is your perfect entry. Why? Because now you know that they are done working the high. Okay, let me put this in red because I think red will symbolize it well. But I think green, because green says we are ready to go. Okay, green is always like something like go, go, go. Okay, you see, this could have been your entry if you were on a 1 day time frame. However, on a 1 hour time frame, if you're taking a 1 hour time frame, because there are those who don't want to take smaller time frames, they don't believe in them. So I wanted you to understand how these things work. Once they go up 1, 2, 3 and they pull out and they give you this pin and engulf, this engulfing candle, this pin was trying to trap more traders, showing them, oh, let's go up again, and people were still buying. Okay, and this engulf here shows you that we are done with all the nonsense we have been doing at the top. Now we are ready to reverse. And believe me, once you see this engulf, after all this thing, after the pattern, after the breakout, after the 3 pushes back inside, after what, oh sorry, let's just do it like this. Okay, let's rather pull it to the side. After the pattern, I showed you 1. You could have taken as 1, 2, 3, or 1, 2. After the pattern, after the breakout, after the breakout, and after the 3 pushes, it could be 3 candles, it could be 3 levels, 20, 20, 20, 60 pips. It could be 3 pushes like this. It could be like 1 bullish candle, 2 bullish candle, 1 inside bar, and another bullish candle. Those are 3 candles. Okay, so the only thing that changes is how they present the 3 pushes back inside. Okay, so that's something you shall bear in mind. Once they do this, guys, they are gone, they are done. Remember, there were people who were buying on this push, people bought on this push, people bought on this push, and when they pull back, believe me, they are done. They are completely done. Okay, they are completely done. Because those who bought here, yes, when they gave a second push, others were still buying and they were in profit. And for the 3rd push, they allowed these guys who were buying down here low to be in profit a couple of pips, and then they pull back, and then they showed you immediately that, oh, now we are done. Okay, so that's how you should understand these things. Okay, so right now I just want to close it here. Just watch it and understand what I've been showing you, because it's a very complex subject to understand. But once you get it, once you understand how they trap, once you understand how indicators play a role in getting people trapped, once you understand how trend lines play a role in getting people trapped. I don't use these trend lines. I'm just using them now as a reference point, just to see that, oh, now the trade is still above, so that I do not counter trend. Okay, I do not counter trend. And I have this trap box, I have my consolidations locked in a box. I have a breakout, I have a 3 push back to the top, I have a pin engulf. Sometimes they won't give you this pin engulf, but most of the time when they engulf all the nonsense from the trapped box, they are ready to go. They are ready to go, because now I showed you how they sell. They can't sell all their order at once, so I showed you how they sell. Once you understand this, believe me, you will be consistent. Okay, I just thought I should share it with you. Why? Because this really helped me. Okay, this really helped me, and I use this chart to analyze, but for my entries I use a different broker. It's just that most of the time I find this charts easy to understand. Okay, so even when I'm taking live trades, you will hear me talking about now I've entered, but you won't see my entry on this chart because I use it for analysis. Okay, but when I enter. That's when I'm showing you a live trade, my live trades. I have a video where I took a live trade with you guys, but I don't usually want to do that because it's gonna spoon feed. It's gonna be something giving easy. You have to spend more time on the charts if you are serious about it. Remember, it's not gambling, it's a business. So if you strongly believe in it, start spending a lot of time in front of your charts. So yeah, if this video helped you, you can just subscribe, because I'm gonna be dropping more deep content like this. Okay, I'm not gonna give you a trend line or something that's so easy. Get this indicator. I'm not after views. I don't care if you view it or not. This will lead you to consistency. Okay, this is what changed me and led me into consistency. So I'm sharing everything with you because it was hard. It was a hard journey actually to be consistent, because most of the content out there is like, oh God, you know, there are a lot of easy things. Most people don't even understand how the markets work, but it's easy to make YouTube videos so that maybe you can sell courses, maybe you can sell what, but I will never sell courses. I think being on the market, it's enough for me. Okay, because I understand them and they are working for me. So I'm not after views, I'm not after subscribers. I just want you to be to actually be consistent and stop blowing your accounts, because if you get trapped in this box, either up or down, you're gonna lose it. Okay, so you want to only execute when you have the results. And here's another example I always give to people. If you want to say, maybe you're craving a cake, you have two options. You can bake it or you can buy it. Okay, and most places that sell baked cakes, maybe slices of baked cakes, they will give you the choice of tasting, so that you buy something that you really love. So if you can't bake, in this case, if you don't have the power to move the market, then the best option is for you to buy the cake. And when you're buying the cake, you're gonna taste, and when you're buying, after tasting, you're buying the results. You already know what you are buying. So even in this instance, if you can't move the market, the only best thing is to pay attention. All these days you were not taking any execution. For those who want to see execution, the moment they open the charts, they got trapped in the middle. Some were selling this pin. Oh, they are giving these pins like on an intention, okay, so that they can get you trapped. You must understand, only execute when you have seen the trapped volume. They can hide their tactics but not their footsteps. Okay, so only buy when you are sure. Taste first. Make sure they are done baking, they are done trapping. And when they give you an engulf, that engulfs all this nonsense, that's where you enter. Now you are getting the cake after tasting it. Now you are getting the results. Okay, you are getting the results because you have seen how everything has gone. The cakes have been presented to you. You have tasted. You have seen how everything up here has been like trapping, and everything was so crazy. Okay, and don't immediately execute at a breakout. That's why I have that criteria: breakout and 3 pushes back to the top. Okay, buy the results. Wait to be sure. You must first see trap volume, and you must see them going away from it. You must see them telling you that, okay, now we are done with this. Okay, and the reason they give you such a big candle after trapping and all these things, it's because they want to use fear against you. They don't want you to take such a big candle. Okay, they don't want you to take a big candle, because people are usually after small candles, they want to catch the top. Oh, this small candle, oh, it seems like it's gonna reverse, let me actually execute. No, don't do that. Doesn't matter how big the candle is, you can just try to finesse it, try to go to a 1 minute time frame. That's how you'll get the best entries, where you actually optimize or maximize your RR, risk reward ratio, whatsoever they call it. Okay, so yeah, thank you. I'll produce another one right now, because there's something I wanted to explain here on a lower time frame, but I couldn't, because there's just a lot to explain when you're talking about something deep like this. Thank you, guys.